into the clip of the week. Again, we just got one today because it's a little bit longer, but incredibly important out of Keith. It's it's a sneak peek into some of the Q2 23 macro themes data, and in particular around the labor market breaking down.
Next question here: is the labor market the last cookie to crumble? If so, might it happen sooner rather than later? Worker adjustment and retraining. Warren notices are picking up, which Cleveland Fed had said is a leading indicator to unemployment claims soon rising in the deterioration in the jobs market.
Well, here's a good, very good question. That's the number 2 ranked question.
It's like 5 or 6.
Good, good curation, because we gave Jimmy his time.
That was Jimmy. So.
Oh, really?
Yeah,
oh, good. So he's asking a question that should lead to why he's buying bonds and gold. Good, nice, Jimmy. Okay. It was Eric maybe mischaracterized you. I think Eric gave you a bad rap. Eric came in here. He was a little on tilt this morning because of you, Jimmy. Maybe that's on Eric.
That was a good one. Maybe I have my own biases. Sorry.
He's got.
No,
He's
you
got
know
some,
what?
You know what? Some good questions.
Internally, okay. Now, so for that, Jimmy, you get some of the content that people didn't get that don't subscribe to Macro Pro. As I said, and you can still get it. Obviously, you can watch it on replay today or tomorrow or the next day for that matter. And you should. As a fiduciary, if you're not going through this deck and you get your clock clean from here, when we went into the debt ceiling period of 2011, this one's going to be worse, we think. April to August of 2020, or of 2011, the S&P was down 20% from there. So if you think April's a good catalyst to buy stocks into the debt ceiling, you have no idea about economic history and or the causal factors affecting it. So we went through that in the deck. That's one of the big fulcrum points of the deck that's relatively new. We give specific timing, specific numbers, specific surgical, Steiner. It's awesome. And it's going to scare the shit out of you. Labor cycle, Jimmy. A little bit more trivial. Now, so I'll give you some of that content. Let's go to slide 45, Ethan. Labor. You asked, so you said, when are the cookies going to crumble? Well, the cookies are already crumbling, okay? Jimmy? Now, when you look at the small business part, which 99% of businesses are not publicly listed companies in America, but they never get reported. You're not going to report on that on CNBC. But the latest deceleration, which is 5 months in a row, is just a bad thing. So when you really think about it, and by the way, on the right side, this is slide 45 on the deck. So on the right side, we're giving you a little sneak peek on all the things in that slide deck that we rattled through that a bull, a telecom Tom would have to refute. All those things are going down in rate of change terms on a trending basis right now. That's a lot. And there's more. Okay? So if we go to the next slide, the most cyclical of labor in terms of the indicators, overtime hours and temp staffing employment. Now, can I draw on that? This is, so rate of change is what direction is it going? You see that? Jimmy, that's not crumbling, that's crashing, okay? That's a little eye candy for you there. And one more, slide 47. The latest March data, downward dog again. Damn it, mucker. You mucker, with an M. If you didn't know, this is what happens. Already happening. So this is the key. You take that hat trick that I just put in there, just stuck it in there, right up top. Top shelf where Callie put it in practice the other day. Where's Brad? Top shelf where Grandma keeps the cookies. Got a place in the Bahamas called the Top Shelf. 3 things that will eventually make the Fed go dovish because we're in a recession, and it will remind everyone why you don't buy stocks as you're entering a recession, because the people can buy less, the consumption numbers go down faster, the companies guide down faster. The only real, according to our analyst team, macro-aware executive to be aware of this from the very outset and to continue to update people, and Brian McGough said he may have been on our call yesterday and or watched the Mother of All Bubbles #Moab presentation, is Gary Friedman, who runs Restoration Hardware. RH is going to get pounded again today. And he was very open and honest about what's going on and not really having a catalyst to see it stop.
Yeah, again, incredibly important in terms of like where we are in the cycle. And I just wanted to reiterate that piece. I think, there was a lot of phenomenal clips or portions of the macro show this week. Keith was actually absolutely on fire each and every day, but I think this one is certainly the most important and the one that everybody at home needs to be cognizant of and be aware of. So hopefully that helps and helps set a picture in terms of like where we are in the cycle.